The first 6 months of the year have been anything but calm for the Canadian economy. And if you've been following the real estate market, you'll know this. So far, the Bank of Canada has cut rates twice this year, bringing the policy rate from 3.25% at the beginning of the year down to 2.75. Now, that's a big drop from where we were this time last year. So last June, our interest rate was 4.75%. So we're down a full percent, which is providing some relief for people who are borrowing. However, borrowing costs are still a large issue for most people. Unemployment has crept up as well. So it was 7% in May, which is higher than we had in January and in June of last year at 6.4%. Ontario has taken the brunt of the US Canada back and forth with tariffs, especially to deal with aluminum and steel, which has hurt our manufacturing base. Our inflation started the year at 2.2 and has ticked up to 2.6%. So obviously that's not an ideal scenario. However, it's not runaway inflation either. The total cost percentage of people's housing compared to their income did ease in the second quarter, which is a good sign. So right now in Canada, based off of RBC's reports, it's 55% on average of people's income goes towards their total housing costs. So that's down from 60% in the first quarter. So things are going in the right direction, and we're seeing a little bit of relief for homeowners. Having said that, those numbers are still very high. They say that you should have about 30% to a maximum of 40% going towards your household expenses. So we still have a long ways to go. July will be a telling month for the Canadian economy. All eyes are going to be watching to see what the Bank of Canada does at the end of the month, if they drop rates or hold again. Also, it will be interesting to see what happens and if Canada and US are able to reach their commitment of coming to an agreement on a tariff deal within the next 30-day window. On top of that, a bunch of new data that we're going to be getting as far as jobs, inflation, sentiment as far as businesses and housing starts. And there's a lot of new information that could shift confidence either way over the next few weeks. My sense is that the second half of the year will be stronger for the real estate market than the first half. I'm certainly not expecting things to go crazy or a rapid recovery, but a slow, steady recovery towards the end of the year.